give a quick introduction about what this session is about and about the Mentoring Club. So I guess everyone knows the Mentoring Club as being a platform providing free mentoring sessions for every professional working in our domain, like engineering, product management, marketing, communication, designers, HR management, startup founders, and other creative minds. So this online network had been founded early in April this year by Jessica Dewald and Bastian Buch, who is also on this session, and I think Jessica will also join a little bit later on. And right now we're already connecting around 160 mentors on this platform from all around the world, I think around 40 countries already or something like that. And it's, I would say, really a great success for the last 4 months to come to this state. Myself, I was joining early in April, so maybe one of the first onboarders. And I'm very thankful that Mentoring Club gives us this opportunity now to have this panel discussion being organized. So in any case, if you are interested in a good mentoring session with very experienced mentors on this platform, just go on the website and check it out and grab your mentoring slot. So maybe a quick sentence about myself. So my name is Peter Wöhr. I'm the CEO and founder of OCmatics, which is a Silicon Valley-based Oracle partner. We are providing Oracle Cloud Services and consultancy. And we also offer special price packages for startups in this context, also in close cooperation with Oracle for Startups. So the topic about today is we want to structure it a little bit going into the panel discussion, starting with, let's say, where we are standing today in terms of the economic backdrop about the COVID crisis and how it impacts the investor guidance and the, let's say, mode of work today with everything going virtual and all the events being canceled and what it means in terms of the networking, which is, let's say, a crucial part for any startup seeking for funding and advice and so on. And coming from that, we want to lead the discussion also then a little bit what it means for early versus late stage startups, if there's any difference, and if so, in which way. And then, of course, coming to some, let's say, best practices or recommendations, especially also from our startup participants today, but as well, of course, from our, let's say, business angel and VC side. So with this quick introduction, I want to introduce the panelists with a few words that you know who we have on our board today. So first of all, I would like to start with Michael Meyer. Maybe you can just wave, Michael, that everyone knows that's you, yeah. So he's a serial founder and since 2018 also the CEO of the German Accelerator in Silicon Valley. And from this perspective or this position, he has, of course, a deep view into the startup and funding scene, both in Germany and in Silicon Valley and in general in Europe and US. And we are very excited to have him here and to learn from his perspective what has changed due to the COVID crisis and what are especially the key differences between the German and the US startup scene in handling in these challenging times and what we could learn from Silicon Valley and also vice versa. So next up is Oliver Trenheira. Oliver is the founder and managing director of the later stage technology startup Kinexon, which had been launched in 2012, so around 8 years ago. So you could name it late stage, I guess. So Kinexon is providing real-time intelligence for the logistics and sports industry in terms of locating and tracking players or other items. So just to give you one example, Kinexon software is currently covering about 70% of the NBA basketball league, which is a strong sign because NBA in the US, one of the, let's say, holy organizations using German technology is really a strong sign, I would say. So, and while many startups are struggling through the Corona crisis, Oliver and his co-founders thrived through this challenge and reinvented or adopted their offering. Now, for instance, also providing distance metering bracelets for industrial manufacturers, even supporting now to track down chains of infection. So I hope we will get some good insights from his perspective in the discussion about the current situation and how to adopt. Then next we have Petra Cechea, and amongst all these great male expertise we have in the panel, I'm super excited to have Petra on this board today. For more than 10 years, Petra has played an executive role for the so-called Alliance of Chief Executives in the United States, as well as Ethos 8, which is a leadership as a service boutique firm. She has built out impact groups presence on the West Coast and has worked with CEOs and C-suite executives in general as an executive coach and advisor. And Petra is a brilliant connector, networker, and is very passionate about helping startups and SMEs to become strong market players while supporting their leaders to thrive both professionally and personally. And while doing so, Petra has also led and created think tanks for executives delivering a mentally challenging and inspiring experience that paves the road to innovation. So with her perspective on leadership, we are very keen to learn how leaders and founders can or should act during these challenging times. So then next at our table is Martin Giese. Yes, Martin. For 15 years, Martin has been a leader at Kabel Deutschland during the 2010 IPO and the 11 billion euro acquisition from Vodafone then. Since 2017, he is now focusing his energy on the startup ecosystem as a business angel, startup mentor, and most of all also as managing director of the incubator Xpreneurs here in Munich for deep tech startups. So if you're looking for a funding expert, especially when it comes to founders, investors negotiations, which sometimes might not be so easy, he is for sure your go-to person. So based on his experience at Harvard and MIT, he is offering workshops, lectures, and coaching, and even published a book on how to finance your startup, which I can really recommend. Great that you are here, Martin, and we are keen to learn how virtual pitches might have changed the negotiation process and learn some hacks you can then share with us. So next up, we have Samwell Schuler. Samwell is a fintech and insurance tech investment professional who is covering existing portfolio investments and new opportunities in the space. For those who may not know his VC company, Yabeo, it's a Munich-based early-stage venture capital fund with investments such as Solaris Bank, Clark, Rentrek, or Koya. And Yabeo just recently closed the Series C founding round with Solaris Bank. Prior to Yabeo, Samwell was an investment director at Allianz X. This was or is the digital investment unit of Allianz Group, where he led and co-managed major portfolio investments in digital corporate initiatives. So now we are very keen to learn from Samwell how work from home has changed his business and potential new requirements for the assets and his portfolio companies or anyone seeking funding from Yabeo or assistance. And last, but for sure not least, we have Federico Acosta. He is a young founder and CEO of the early stage startup Custom Surgical. He did this while completing his master's studies in biomedical computing. Custom Surgical produces and sells medical devices integrated with smart software solutions. So just to give you an idea, Custom Surgical, for instance, developed a device for recording surgeries with your smartphone in 4K resolution. This is a groundbreaking, especially for developing or emerging countries who could receive live online support from around the world, facilitating this technology. And we are excited to learn from Federico how COVID-19 has changed, especially his business in this health domain, and whether it challenged its funding or Custom Surgical rather benefited from it due to its healthcare approach. So having said this, I would say in total, it's a really tremendous group. I'm very happy about it. We have everyone from investors to founders, coaches, and to experts in funding. So again, thank you all so much for taking the time and sharing your knowledge and expertise with your mentees and today's participants. So if anyone from the audience has any question, you can at any time shoot it to the chat and I will see to collect and to feed it into the discussion. And we have also reserved some time at the end of the session for any, let's say, live query and answer, which might come from the audience. And of course, you can also then unmute yourself and speak it out verbally. So, as I said, our today's topic is the founding or funding startups in challenging time. And while none of us had expected 2020 to become such a challenge, it might even have changed our way of working and investing in the long run. So we start with where we are standing today. So when we have looked at in a nutshell, we experienced a severe economic backdrop by at least 3 to 5% in GDP, maybe even up to 8 or more % predicted for end of this year. Just depends on which GDP statistics and forecast you look at. Just to, let's say, show you one thing as a, let's say, illustration. We don't want to put big slides or anything on the screen just for this, just to introduce that. I mean, just one graphics you might see here from the World Bank. You can see that the backdrop in economics here in the red line due to COVID is far more severe than what had been seen before in the financial crisis or in crises we had before. This is also, let's say, being underpinned by some figures here from the United States economy, especially. Considering end of Q2, you see the backdrop here, and you also see the consumer credit card spending is significantly went down. So, but anyway, we don't want to make a, let's say, dog and pony and figure show here, just to give you some graphical example what it looks like. And having said this, I would just like to shoot my first question to Martin. And Martin, you have experienced numerous times of crisis in your professional career. So from the dot-com bubble in 2000, financial crisis in 2008, 2009 to the Corona crisis this year. So my question would be, do you see certain similarities or even learnings from these various crises?
That's a big question. So, I mean, some things are similar, like sentiment going down significantly, and lots of pressure, of course, especially for startups to adjust. So we know that the dot-com bubble, which was the first one I saw, a lot of the dot-com business was marketing budget pushed around between the startups, and when the spending dried up, that dried up, and startups went down significantly. Actually, here in Munich, many of the startups we do are much less in the marketing and hype business, but more in the B2B business. So I felt the impact was not as extreme. Some had difficult times to find appointments with their customers to get on site for pilots and to kind of roll out their business as planned. But so far, I see especially our startups adjusting extremely well. So I have actually no COVID casualty in the 20, 30 startups I closely follow here in Munich so far. So, and even some success stories.
That sounds very promising. So maybe I would like to bridge this question also to Michael. And given your deep insights into the German market, Michael, and your view into the Silicon Valley from your professional background there as German Accelerator CEO, from your perspective, what have been the main changes you experienced in the way of handling COVID-19 among investors? Let's say, are the golden years over, or do we experience some kind of healthy cleaning from that perspective? Michael, you need to unmute. You're still on mute.
Hear me?
That's better. Yeah.
So in many ways, it feels the same as 20 years ago, the dot-com crisis, but not much. And the first reaction, first I should say, the economic data in general, let me talk about the US and Silicon Valley first. Yeah? They came out, you probably heard this a couple of days ago, and they are pretty devastating for all the US. But the, let me say, the confidence, and this may be a little different from the speaker who just spoke, yeah? The confidence in Silicon Valley investors doesn't seem to be that bad. Yeah? There are many, in Q2, many deals have been made, and the total investment, which happens to be, I think, 70 billion, all of the US, they're not bad numbers. And the investor confidence is not that low. Actually, it was a little lower a couple of quarters ago. I have to say that the impact of the latest data, which just came out 2 days ago, probably are not factored in yet. So we don't know, maybe a little early. But in general, what was expected 20 years ago is visible today. And that is that investors, at least in Silicon Valley, try to mitigate their risk. So it is right now, it may be for the next 2 or 3 or 4 quarters, God knows how long, more difficult for early stage companies to get investment, which is pretty logical for investors who are invested. Of course, they want to do follow-on investment. And secondly, of course, it's less risky. So early stage companies might have a hard time right now and may have for some time, but actually the recommendation there is go back to the basics. Develop a solid business model and demonstrate that you have some reality in outlook for revenue. Then it should be okay. If you look back 20 years ago, it didn't completely dry up. Some stellar companies still got investment, even in 2001, 2002. We might expect the same thing. So now for the next 1 or 2 or 3 years, do your homework and come up with a good, solid business model and demonstrate that you will be able to generate revenue.
This is interesting, Michael. So that would mean bottom line that the guidance for the investors did not, let's say, change so much from that perspective. Is that something, Samwell, I would like to pass this question also to you, that you could confirm it in this way from your Yabeo perspective, or do you see it slightly different?
No, I think, first of all, thank you for having me here, Dieter, and all in the panel. I think clearly the core of what Michael just said, I think clearly I would confirm close to 100%. I think what has worked until now in terms of digital business models, I think, and most of us, many of us, we talk about digital business model or digital only or mobile only or digital first at least, and that's what we focus on. Clearly, I think have even shown that during the past 3 to 4 months now that have been difficult in the US, it's kind of extending a little bit further. Have proven to be even more successful, or at least people have kind of made use of online payment systems where they used to have kind of vouchers or checks. As a simple example, in our case, we have seen that people have started kind of becoming more cautious, even in terms of what their insurance coverage is. We have insurtech investments which have done extremely well, because I think people have become more conscious of what it might, what their setup might look like in terms of health coverage, in terms of covering risks of any kind. So I think the overall, in terms of the industries that we look into, that is fintech and health tech, they have done quite well. I think there has been clearly a bit of a dip short term, at least expectations had to be adjusted for 2020. Certainly, no one of us can project what is going to happen now after the summer with COVID itself, with the core of the problem. But I think overall, it's been a fairly short-term dip, as far as I say, as far as the companies are concerned that we're invested in. And indeed, we have kind of doubled down on numerous kind of already winning investments that we're in. And so in that respect, I would clearly confirm what Michael said, kind of during these times, in early stages, but also in the growth stages, series A to B, and then further on, we focus on A to B series in terms of funding. It's kind of a time where I think the wheat separates from the chaff, and those businesses that have a functioning business model with revenue growth, with strong traction, they're able to get follow-on funding. Investors who truly care about their startups, they kind of contribute additional funding in order to extend kind of runway to give companies and entrepreneurs a certain level of peace that they can focus on their business for the next, more than just 12 months, but rather 18 to 24 months until they have to go back to the private markets and ask investors. I think clearly we also have kind of turned down a little bit, at least our the number of conversations we have with new investments. I think clearly we're generally more cautious. I believe the market overall has, with new investments, kind of almost shut down for some time. But we now see both on the companies on the startup part, but also on the investor side, that they're now really kind of coming back to the market, and companies, I think, that needed money, that entered into a funding round early in the year, kind of found ways to balance it out, and now they're really kind of starting again with larger rounds, with new investment rounds that would have been unthinkable only 3 months ago. So I think overall the sentiment, I think, has found a dip a couple of months ago, but I believe there is quite a bit of a rebound now as well, really almost across the market.
This is a very interesting statement. So in a nutshell, I would say the resiliency of the startup ecosystem is not so heavily impacted by COVID-19 as it looks like, even though that I hear between the lines that the guidance, if any, deviate a little bit in that direction, that it's more about securing the portfolio than going into new investments, which is, I think, reasonable and understandable. In any case, as we all know, I mean, the investment or the startup and VC business is most of all about people, not only about business ideas and shining products. It's about the teams and the people. So hence, I would also like to ask Petra, as being especially in this domain in terms of leadership and people management, how do you see, let's say, as a quick snapshot about also the colleagues from the CEO Alliance from your end, their assessment about the current situation, and any advice and how, or let's say any judgment, how the cooperation from a more people point of view did change in this time?
And thank you very much. Thank you very much for giving me the opportunity to be on the panel. And I am glad that we're coming to the people now, because ultimately, we talked about making your investors feel secure, and the people are really core to that. The key people, in my opinion, of course, you need a good business model, you need a good product market fit, but in the end of the day, people like to work with and like to invest in people that they trust and that they have confidence in. And now more than ever, that is really important. So as startups go about investing new rounds or getting additional rounds from their investors, I think it's really key that they spend time on investing in their core team, and also for the CEO to really show up strong and confident in their investor conversations. And I would say I'm actually, and I hope this doesn't get misinterpreted, I'm excited about some of the consequences of the whole COVID situation, because it's a lot easier now to get access to global funding as well. I mean, Silicon Valley for a long time has held a very strong stronghold. Okay, this is the core of where innovation happens and where investments happen. But I also see a lot of interest now, for example, from VC funds out of Africa that before didn't have the opportunity to get to startups, be they in Germany or be they in Silicon Valley. I'm also contributing to something called Global TaiCon, which is a very strong Indian community in the Valley, but also globally. And they have asked for, there's a big event that they're hosting in September. So they asked for featured startups that I can think of, or investors I can think of, that they can feature in their Global Connect track, which will be much easier because everything is on Zoom. And as much as I love being face-to-face with people, I'm a total people person, the fact that we have to do Zoom calls now has actually opened up new connection points geographically for investors and startups. So from that perspective, that's obviously typically everything's great. We're very optimistic here in Silicon Valley, but I truly see this and I'm excited about this. And I'm also excited about the fact, I run CEO, as Peter mentioned, peer groups, and a lot of the conversation is about how do we move people back to work? Do we even move them back to work, or do we work completely virtually, and how do we redesign office space? What that does is it frees up budget for leadership development, for coaching, for all these other things. So I think in the long run, this will have a positive impact. Yes, will the global economy suffer, and will we have to adjust? Absolutely. But crisis brings out the best in people sometimes, and definitely provides great opportunities.
That's an interesting point of view, Petra, also that, let's say, the change of the work model facilitates now new chances, like you said, because if everything or everyone needs to go more or less virtual these days, you can extend, of course, your regional scope, yeah, because if you can't meet personally, of course, you can facilitate that also for your benefit. So this coming, let's say, from a more broader view, now a little bit narrowing down to a more investor focused view. So I would like to ask or to hand over also to Michael from this discussion stream. What is your experience? I mean, did you see that pitches had been cancelled or rather being done virtually? And what, from your perspective, are the changes that have come with this new work model, let's say?
Me?
Yes.
Well, of course, I mostly experienced the Silicon Valley, and I haven't spent the last 6 months in Silicon Valley. Yeah? So, but to your question in particular, I think all of the Valley has been going virtual. So there is no in-person, still hardly any in-person meeting over there. Is this your question?
Yeah, this was my question, how, let's say, the virtualization and the working from home model impacted, let's say, the partnership or the way of how investors and how startups are dealing with each other, especially in terms of pitching and so on.
Well, I think there are individual differences. I have a very good friend who is a partner in the venture firm, but he never leaves, actually he never leaves the home, still today. So it's all, at this point, everything is virtual, and numbers, as you, I suppose all of you know, the numbers, particularly in California and Florida and some other states, are going up, so it doesn't look good. And I think people are in the process of preparing, both on the investor side and on the company side, to do a mostly virtual way of doing business. I may point out, I don't know whether you know Matt Mullenweg. He's the founder of WordPress, and he developed a very interesting concept, kind of 4 stages of going virtual. And I've sent this around to investors and companies, and they seem to adopt this in a amazing way. So some companies, without any names, that I didn't expect to do that, they plan to do all of their business in the virtual way. So there's a big change going. May I just add one interesting topic to the previous question, please?
Sure.
Is investor confidence. What COVID has been doing or is doing is, well, you could say the reaction is very pragmatic. Yeah? In terms of investment activity, we see actually 2 amazingly strong areas, segments. One is, it's not so surprising, but the degree this is being followed now, being executed, is amazing. Yeah? 2 areas, business areas, are actually much stronger now than they used to be. One is software, and the other is biotech. Both not that surprising for this very reason. Yeah? And you may have heard about the results of the big 4, the big tech 4, Apple and Amazon and Google and Facebook. Actually, they increased their revenue in the last 6 months. in the last 4 months. And this is a very pragmatic reaction of the investor market. Now, software, tech, yeah, and biotech, for obvious reasons also, is stronger than it ever has been before. So it's kind of curious how nearly automated this is happening. Yeah, at least in America. I'm talking about mostly about America, yeah? Silicon Valley, and this is just a pragmatic way of reacting to this crisis, which, I mean, they make an opportunity, literally, they make an opportunity out of every problem. And this is what we are seeing. On the other hand, for example, transportation is going up. Yeah? So you see a very pragmatic reaction in the market. Sorry, this is not directly to your question.
No, that's fine. I think this is a very valuable observation, and of course, especially software as a service is getting a good boost by that. So, would you believe that there might be also several areas of business across other industries which will open up for virtualization, and those business or use cases? So, for instance, edutech and virtual offices, health, and so on. I mean, we will hear something about health later on from our startup colleagues here, but from your perspective, do you see that this will broaden up beside the domains you mentioned?
I imagine, yes. I mean, opening up to virtualization, you mean?
Yeah.
Or business dynamics in general. My last comment was about business dynamics, which is very good for software and biotech. But opening up to a more virtual way of operating, I'm sure this situation, crisis situation, will have a deep influence in many aspects of society, but certainly what we are talking about now, and that is companies and their interaction and interacting with investors. I think there will be deep consequences for this in many areas of society.
So maybe to closing this topic from, let's say, the investor perspective, one thing, of course, is especially now for incubators, and I'm addressing this to Martin. I mean, the business model of an incubator, of course, is that people are working closely together. That is why it's called incubator. So how is actually then a virtual incubator running, like Expreneurs, for instance? So from your perspective, what did change in your guidance and in your working model over the last months?
It hit us in full swing. So in March, we had just started an incubation batch of 16 companies. We had just jointly climbed to an alpine cabin and spent an evening with beer crowded in a cabin and sleeping in 10 people bedrooms.
Oh, a super spreader event.
To form a team. And then in week 2, the lockdown kind of came and we had to go full virtual. So for an incubator, that was a real challenge, because I think that community is a key point. Actually, the serendipity and the chance encounters are a key point. And human contact is a key point. Just in terms of pitching, I think historically, always when we have pitch events to get into the incubator, and most teams came live and a few teams pitched virtual, almost never a virtual team managed to give this spark to get through the final selection round, because there is something about bonding and human connection and life. And I also recently heard from a VC that it was a very tough thing to do the first deal where they had never met the people in person, but just via Zoom. That really took an extra effort to get beyond the hurdle in feeling good and have the right gut feeling about this deal. So that is important. In terms of virtual work, we needed some adjustment. I think it was easy because everybody was virtual. I think now in the fall, with some easing, our challenge might be hybrid formats, with some people being in the room and some people virtual, which might be the next challenge that we need to get through in terms of teaching and pedagogy. How do you integrate both groups? Same actually if home office is spreading now, that will be a challenge for many group dynamics, to have not 2 rings of people, but to integrate both groups into the dynamics. I think, as Petra said, there is a chance because being fully virtual, our geography is bigger and we can cater to teams from the whole Europe, and they don't need to be within driving distance. And actually, just as an opportunity, I'd like to point out we are actually currently doing a pan-European call for startups that tackle COVID-related issues in urban mobility, together with strong partners in Europe. And I'll post the link in the chat. If you know any startup that combines mobility and COVID, and we have a very short deadline and would be very intrigued to hear about them. So then so that they can test our virtual or live offering based on their location.
Yeah, let's post it on LinkedIn. I'm sure that from the community there will be some feedback. I personally know already one I could address this to, so that's very interesting. So I would like to shift a little bit now to our, let's say, after we heard about the more the money side of things now, or the money giving side of things.
I would love to add something to Martin, so sorry to interrupt.
Yes, please, Petra, please.
I think that was really important, you know, but the whole engagement, you mentioned that VC that kind of was hesitant making the first investment into a team that they had never met. So I think as you train or prepare people for their pitches, that there's an important component to it, and that is about bonding, and that's also true for with your team. How do you create bonding moments in virtual scenarios, whether everybody's on the virtual call or whether some people are in a room or not? And I think that's really key as startups are raising or re-raising funding, but also as they manage their own teams. And that's a real art as well to create those connection points. So yeah, thank you for bringing that up.
Yeah, thanks for this addition. This is a valid point. I just wanted to shift now the discussion a little bit also, let's say, on the other side of the table, even though that it might be a round table because it should not be, let's say, front chairs. But let's hear about the startups, and I would like to bring Oliver into the discussion from what you have heard about, let's say, some slight changes in the VC governance, about the financing rounds and the opportunities, and about the new working model. So maybe you could explain us from your perspective, from your founder perspective, do you see it the same way as we had been discussed, or how did you react also, let's say, to ensure your further path forward? And what is just your opinion about all that from a founder's point of view?
That's a good question, Peter. You covered many facets, and I will try to address them the best way possible. So I think when the first indicators of Corona came up, we already saw the first big, especially the US venture capitalists, issuing guidances of how to behave in that crisis. They built on their experience of previous crises like the dot-com bubble or the financial crisis that we went through. And I think in those presentations that are publicly available, it's quite transparent what they suggest and what their way of thinking is, and how their way of thinking changes also in this crisis. I think what was apparent is that they said there's a big amount of uncertainty in the market. And this uncertainty also increases the risk somehow. And as you know, venture capital always considers the risk either in making the decision or in the discount factor that they involve in the valuation. So I think it has an immediate impact on their behavior. But what I currently see is that while many people on the street, especially here in Germany and also in other parts of Europe, seem to live in a kind of normal situation again, we see other parts in the world like the US, like South America, etc., where we still have a, let's say, more uncontrolled situation with regards to Corona. And this is something where many people here in Europe are also afraid. Currently, we seem to be in a state of stabilization, but winter is coming, and with the winter, more and more people will get closer to each other in closed rooms. And then also the risk for more and more infections will rise, and nobody knows what this will mean for the economy and all the, let's say, topics that are associated with it. So I would say currently people are curious to see what will happen. We see that on the venture capital side, there is, let's say, a more careful consideration of business models. We see a kind of, let's say, survival of the fittest. So we see that many ventures that 6 to 9 months ago would have easily raised money from the market now have difficulties because the market becomes more careful in terms of valuations, more careful also in terms of selection. And the weird situation is that this happens in a time where through quantitative easing, we have, let's say, almost unlimited amount of money in the market. We see that we're living in the biggest pandemic that we have ever met as humanity. And nevertheless, the stock prices are on an all-time high. So it's somehow, I would say, a weird situation where the fundamental economic data points, such as the one that you showed, I mean, that's very impressive, do not really correspond with what we see on the stock markets. So somehow a strange situation, I would say. And given the fact that nobody of us has ever gone through a similar situation, I think everybody will now be curious what will happen, especially over the next 6 months, especially when winter comes again and the risk of more infections goes up.
I think that's a good point. Let's say this decoupling of the financial markets from the real economy, but I guess it would fill up an own panel by itself, probably. And of course, projections are really tough, especially when they are concerning the future. Anyhow, I would like to pass over this question also to Federico from his perspective. How would you elaborate that?
Well, I might say that I'm probably proposing a different view over here, as we have heard from the panel, because actually for us, it's been a time of opportunity. And relating to the comment of Petra, I totally concur. We're seeing new developments taking over, new behaviors being adopted by our communities in the different cities. This is the perfect example, what we're doing right here, doing this call on Zoom. And these type of developments bring new opportunities. And that's exactly what affected us. We were considering bootstrapping at some point. We were part of Martin Giese's Expreneurs team. And actually we accelerated heavily during the incubator program. And it was because we realized there was some opportunity inside this pandemic. So we have been working on creating medical devices. And at the moment, we thought, we realized there was not going to be many purchases by the time or the situation that was happening. So we shifted a little bit and we created an open source project that we called MedShield. And we were actually giving away for free designs of masks that people could wear in order to be protected from COVID patients. So we grew our brand awareness, our company. We were visited our website from 140 different countries. Our designs were downloaded more than 10,000 times. More than 50,000 people visited our website. And right after that happened, our sales started boosting. And that brought venture capitals in contact to us like immediately. We actually were not seeking to get some financing. Now we're considering, but after that situation, we were contacted by some accelerators that are gonna bring some capital in Silicon Valley, simultaneously also some over here in Berlin. And I would say this situation was like a trigger for us, or it was like a catalyst, because it actually boosts not only our sales, but the opportunity to get financing in this situation. So specifically because of course our device can be used in the same setting we are receiving over here. We can connect to a Zoom call and transmit live any type of microscopic surgery that is happening. And that is extremely important for doctors. They want to do telemedicine right now. They want to have consultation remotely. So I would say, although I understand the situation, we've seen the other side of the coin, in which we were actually approached by the good numbers that we were presenting through this situation.
Yeah, this is, of course, from your perspective, totally reasonable and understandable. I mean, you also had, let's say, the right product portfolio, which you could quickly adopt to according to the situation. Yeah. This is
maybe let me add something, because he said so nice words about our incubators. Let me retaliate. So
go ahead.
this is a guy who aced virtual pitching. So we gave for the pitch night our startups if a carte blanche to do with their 3-minute whatever they wanted to do in video. And when they showed us their pitch video, it looked like General Electric pitching a product in terms of professionalism, visual art, and everything. So these guys are doing great, and they make the incubators look good because we only look good when our startups do well.
Didn't know that GA made such good videos. Okay, so anyhow,
it looked like they had a 6-digit budget for a 3-minute pitch. Let me put it that way.
Yeah, this way, this way around makes much sense. Yeah, so I think we have all seen, and I see it also a little bit from the comments in the chat window, that this was a very interesting, insightful, and helpful discussion. And we know that the times are challenging, and founders need to somehow adopt to it, like in case of Federico, for instance. And whether it might be now calculating the run rates and the remaining runway, or virtual pitching, or leading teams in insecure times, there are many aspects which can be put light on. So we have so much experience here now in this virtual room. So I would like to gather some tips which we can also finally share with our listeners before we come to a Q&A session. So Martin, if there's one person I would have in mind when it comes to funding negotiations, also, let's say, from my very personal background with you back at Kabel Deutschland, I know it's you. So about your endless experience. So what would be your special tips for founders during these days? What should they do or don't do from your perspective?
I think one thing is a certain bit of resilience and keep trying. So in terms of funding, especially early stage, I think it has gotten more difficult. I mean, we just got the German numbers, and Munich was the only location growing, but there were several big rounds. I think in the early round, it's getting more difficult, and you need to do what you always need to do to really curiously learn about your counterpart. And actually, we've seen very good behavior and very bad behavior in crisis times. Some business angels just lost their firepower when the stock market went down, and that you also need to take into account. I know other business angels who took all their money off the stock market and suddenly had 6-digit amounts on their bank account and were very eager to invest. So you really don't get discouraged if 2 or 3 people you thought might be relevant aren't interested or not able to act in the moment, and keep searching because there is also opportunity.
How would you see that, Samwell, from a, let's say, more institutionalized VC perspective?
Yeah, in my view, I think I'd like to follow on, I think what Oliver mentioned on, I think that, I mean, only just technically, I do have quite a kind of diligent view on why the stock market has behaved the way it is behaving. I think that the short-term dip that they have, and I think you even mentioned certain valuation methods, I think that are widely used, the discounts that are being applied. I think it all comes to the question and the matter of how long this severe crisis on a short-term basis that we can oversee now is continuing, and it has a continuous effect on broad parts of the economy, and then we'll see somehow a more major adjustment, I think, in the stock markets, or else they will just, these models that analysts use will just kind of flatten it out. I think that's kind of a remark to that, but the point being made, indeed, there is a tremendous amount of capital out there in the market, in all in all segments of the market, including institutional monies that just are desperately looking for capital. I think we had already seen before that, given the fact that you can't really, or on the one hand, strong companies publicly listed, they're increasing in value significantly for many years now. Again, the Amazons, the Facebooks, the Googles reaching kind of all-time highs, crossing the trillion mark. People don't really have, and bonds and kind of Bundesanleihen, they don't really have any. You don't get any interest on something that people have high security on. So I think what we've already seen in the market is really that people come downstream, I would call it, or a down market. More and more investors who wouldn't have thought of venture investing are now seriously considering going into these areas, because they have certain return targets and aren't able to achieve those unless they take more risk. So I think that is a generally speaking, I think, a positive development. But you also have kind of from a, I think, entrepreneur's view, then you have the risk that more and more people go into VC that simply don't really know what they're doing. And I think that's I think what entrepreneurs want to see is they need capital. Obviously, that's kind of the given if you call yourself an investor. But I think you also want to have someone both that adds value, relevant value to the companies, and then I think, as Martin rightfully said, you want someone who is able to follow through. You don't just, angel money is extremely important, helpful at an early point in time, but then you want to kind of go to bed with people that can follow through at later stages. And I think that's important to understand for companies whom they choose for themselves. Obviously, it's difficult to get funding. There is competition, but I think entrepreneurs are on a good track if they really do their homework, approach the right people, and then do kind of really counter due diligence. That is equally important. It's not just a one-way street where investors choose companies, but it really should be the other way around as well.
Yeah, you said something important, Samwell, about, let's say, the profile matching between investor and entrepreneur. It's like, let's say, kind of a small marriage, or maybe even more serious from a certain perspective. So I would like to pass that also to Oliver from his perspective, not only as a startup founder, a successful startup founder, rather also from a, let's say, operational manager perspective, leading a couple hundred of employees in the meantime. Sorry, I don't know the exact figure, but it's, I think, quite a big shop in the meantime. So how do you see that also from this perspective to lead your people through these unsafe times?
Yeah, as you say, unsafe times involve uncertainty, and uncertainty is always something which is a kind of a poison for employees also. So if we have a look at high performance teams, we see always that there is a kind of purpose that they need, that there is kind of psychological safety that they need. And from my personal experience, I can tell you that when Corona came up, that first of all people were nervous in a certain sense, because nobody has ever experienced such a pandemic before. So now, first of all, people have private concerns, because they have their loved ones, their parents, their sisters and brothers, etc., and have the fear that one of their favorite ones gets infected by Corona. That's the first thing that you have. Then you have the second aspect, that people, of course, also wonder what this will mean for the business. I mean, if they open up the newspaper, they're reading about an extreme recession that will be ahead of us, etc. And I think in this situation, you need to give context to the people. You need to have a very clear, transparent, open way to communicate with them, and to give them stability, to tell them that a crisis like Corona will be over one day, and until it's over, you will try to do the best out of it. And fortunately, Kinexon is in a situation where we in one of those digital environments and digital markets that, in spite of Corona, are still moving forward and are still growing. It would be a different thing if it would be a travel startup, for example. So fortunately, we are in segments that are, let's say, not extremely affected by that. But this is something that you have to communicate to people, and not just by words, also by images, by numbers, to give them confidence and to give them the feeling that you will guide them through that extraordinary situation, and bring them like a ship on a rough sea, in a safe manner to the next port. And what we did especially, and you already touched that point, Peter, is that in Corona times, we immediately realized that keeping the distance is one of the crucial elements in order to fight COVID-19. And what we did is that we adopted our existing sensor and software technology to measure the distance between people that wear a small sensor on their in a kind of bracelet or in a kind of badge. And whenever they come too close to each other, the sensor gives a warning signal, either a sound signal or a video signal. And in case of a positive COVID case, you have the option to manage the exposure of the people that the infected person has been in contact with. And this was something that was interesting and a very interesting experience for our employees, because in a crisis situation where many put the foot on the brake, we put our foot on the accelerator and said, okay, we have here a certain technology, and as a company we have also a social responsibility, and let's try to bring these two aspects together and do something for good. And then we come back to what I said at the beginning. Suddenly we had a situation where we created something that has an extremely high relevance for the people at Kinexon, because we do something that helps people to stay safe and helps businesses to continue. And this was something that brought a completely new perspective in terms of impact to them. And impact is one of the, let's say, core ingredients for well-functioning teams. And by combining the safety aspect and the let's say the impact aspect and the overall purpose topic, I think we brought together some of the ingredients that in the end put a high motivation on our team.
This sounds like a good recipe, and I think other companies could tailor that according to their needs. I see that we have only 2 minutes left, so we shrinked a little bit the Q&A session, obviously, but I think we could have spent very easily just another hour or two on this kind of discussion. So anyway, I would like to give at least a chance for 1 or 2 questions from the audience. So I see we did not lose many people anyway, less than 10%, which is a good stickiness rate, let's say. So I would just ask into the audience, any kind of questions we could use for the last 2 minutes.
While you're collecting questions, I just want to compliment Oliver. Oliver, you're actually exhibiting what I call secure-based leadership. I work off a framework of 6 Qs, and it's really about how do leaders make their people feel secure. And part of this is giving them purpose. Obviously, there's a lot more to it, but I think that's just leadership. It's excellence. So, nice. Thanks for sharing.
Thank you very much.
Okay, so when I scroll here through the chat window, I don't see any particular question. Bastian, did you notice anything in particular we should look at?
I sent you 1 or 2 in private messages, but not more.
Okay, but this had been discussed during the meeting, I think. So, okay, so anyway, the time is running out. So maybe just a last final word from Michael, as being one of the most experienced persons here in this round with 30 years of Silicon Valley. Any final tips or words from your end you could give to our audience and also to us, of course?
This has been said before. This is for startups. This is, I would say, is not a disaster situation. It's an opportunity. I've been in Silicon Valley too long, obviously. Yeah. But this, do your homework, go back to the basics, brush up your business model, and if necessary, complement your team, and then go into the next step in full force. This is an opportunity and not a big problem.
I think that's a good closing statement. It's an opportunity and not a problem. That's the right way to see things. So we are right on the time. So I would really like to thank all of you to being in the panel today, sharing your time and insights. Yeah, and also thanks to the audience for listening to this fruitful discussion. And I wish you a very sunny and hot weekend wherever you might be in the world. And looking forward for the next panel, which we might organize pretty soon from the Mentoring Club. And like I said in the beginning, have a look at our website. If you need anything, you will for sure find someone there who could give you some coaching and mentoring session for free.